to show that. Keep an eye on this red line, and sometimes you get a feel of when it's going to break out. If you watched Andrew trading today, I think, what was that stock he traded? Chris, CRIS, right? The low float? I think it was low float, I'm not really sure. Anyway, there was a hammer at the high of the day. And Andrew went for the breakout. Let me actually see, I think it was CRIS, and I'll show you that. Was it CRIS? It was at the open. It was at there it is, this one. I think it was this one exactly. So Andrew took it to the long side on this candle here. Immediately after this closed as hammer, because it was being pushed back up, or maybe around this one. I don't really, no, it was this one definitely. Yeah, so Andrew took it to the long side because it looked like it wants to break out. It looked like it wants to make a new 1 minute high. Let me move this microphone. Then it just failed and it didn't break out, so he bailed immediately on the trade. On breakouts, it's the same thing. You get the feel of it. If it's trying to break up, it's trying to get pushed up. You enter a little bit earlier before the breakout. If you want to be safe, and better safe than sorry, wait for the breakout, but that will get you some slippage and it will mess up your risk to reward a little bit. Sometimes it will miss it so much if the breakout is that big. You're welcome. So, okay, let's see what you did, guys. Then I'll go over my trades. So Joe traded PLTR. And let's see what you did there. Daily chart is good on this thing, right? It's looking strong. It was up. Let me get the epic pen here. It will be easier for us all. You could see that on the daily chart, we're making an ABCD pattern. We are pulling back, doji at that day, and then we're bouncing. We're hugging the 9 on the daily chart. Yesterday was a really strong day. Today, a continuation was definitely expected, most probably, right? It could definitely drop a little bit inside. Why is that? Because we know how the candles have been traded. It could go all the way down, not making a long, then squeeze and come back up. So short was not impossible to catch in it, but definitely a long would have been interesting. Looking at the 60-minute chart, flat range right here. And what happens at the open? The breakout. This candle right here would have been really good for long if you catch it. You could see we're breaking and we're making a new 60-minute high. Catching it at 30.50. There it is exactly 30.50 at the breakout. You $1 move. This is not a small move. It looks like it's only one candle and it's one 1 minute candle. It's not really worth taking it. If I take it, it will not give me enough money. It will. If you manage to catch this one for an open range breakout or put your super somewhere down there here, this will be at least 4 hours trade. Now the second minute it engulfs and it drops back down. What happens right there? After the breakout, stocks going into the middle of the range. And this is where we started getting interested in a short and not a long. And since we had an engulfing, this is a pattern. Remember this pattern? Bearish engulfing crack, where the bearish candle engulfs the green candle. This is the bearish engulfing crack. You take it to the short side, put your stop loss in the middle. You don't put your stop loss at the high of a new 1 minute candle. You put it somewhere in the middle. If you have a wick on this candle, for example, it goes a little bit up and then it drops down, you put it above this wick. It's usually enough. So there it is, going down, partial, partial, partial. And now no reason to exit at break even, in my opinion, because we know how the candles are being traded. Like it could go all the way up, not making you high and drop down. The drop was huge. Reverse ABCD pattern could be expected. Those moving averages on all the charts, they are acting as magnets. So stock, the price action usually gets to them before a continuation. Definitely good to see it just going in your favor, but if it doesn't, always leave 5% of your shares at least to run, or 10% with a good technical stop loss. If it works, it's good. If not, then not. Now, I see you re-entered, which was smart, and exited at break even, which is not the best choice because the stock was really good. The price action is really good. It's fine. You re-entered one more time, and now this re-entry was also good. You're having a reverse ABCD pattern. Along with that, it's a 3-bar play on the 5-minute chart. So we combine them both. Along with that, we got down into the middle of the range after the breakout. If stock breaks out and gets into the middle of the range, no longer interested in it for a long. I'm interested in a short. There is our short indicator. 3-bar play. Take it to the short side. Partial, partial, partial. That's amazing. Guys, is the screen blurry? I don't know why it's blurry. Let me see if I can set something on the settings. I doubt it will be possible. I mean, the resolution on this one is the recommended. Yeah, unfortunately, I can do nothing about it. I don't know. Maybe it's from the room. Yeah, I can do just nothing about it. I'm sorry, guys. Yeah, exactly. So let's see what else we have. I'll try to zoom in the charts. Hopefully that will make it a little bit more clear. Now let's see what you did there. Traded PTON, and let's take a look at PTON on all the time frames. This is the 60-minute chart. The 60-minute chart on this one is not the cleanest. You see that there was a breakout up here around this area. 1 week could be ignored. It broke out, and it actually went exactly to that week and held on it as a resistance. Couldn't just go higher anymore. After that, it's dropping down. And where is it sitting? It's sitting in a channel. You could draw a channel, and channels are tradable. You could trade the range between the channel. How do you trade it? You either buy it as close as possible to the resistance, and the middle and the bottom is your target, or you buy it as close as possible to the low, the middle and the top is your target. Another way to play it, you buy it or short it in the middle if there is a pattern, and you go for the top as your target or the bottom as your target. So this is definitely playable. It's not so clean. It could be a little bit difficult if there is no pattern intraday, but this is totally playable. Now let's see what you had there on the 5-minute chart. Actually, you didn't play it based on the 5, I think. I think this wasn't played based on the 5. You took it to the long side. Now, I wouldn't have... oh, this is the 15. Sorry about that. So I wouldn't have taken this thing to the long side. Anyone? Remind us, why don't we take this thing to the long side here? View up. One reason. Another reason. Yeah, going against resistance levels, against view up, and against moving averages. That's it. So I see what you saw right there. You saw that week right here, it got bought back up. It formed a double bottom, and it's making a new 5-minute high, which might have been your indicator to take it to the long side. But so far, the moving averages were sloping down. It's sitting right below these moving averages. You're having a level right in front of you, and you don't want to force it on the way up. On the way up. There is nothing to break. This right here is not a breakout. You want to take setups or trades if they are breaking some sort of level or some sort of resistance or something like that. Right here, it's not breaking anything. It's just going into the face of the moving average after a huge move. This entry, on the other hand, is good. Why is that? Because you're breaking a level. You are starting to form sort of resistance around here, and you're breaking it. And you notice that. I bet you took it to the long side because of the break of this resistance right there. So this was totally good. I like it. What would be our stop loss? Our stop loss could be in the middle. You don't need to even to put it down there. Why don't you need to put it down there? Because if it makes a new 5-minute low, it means it is a new 5-minute low, which means this is a reverse ABCD pattern with an M shape. Enough to have your stop loss somewhere around here. Give it some extra room in case it consolidates within the same candle. But this would have been enough as stop loss. Now it's going in your favor. You are adding on the way up. This is something which is not preferable to do. Why is that? You are breaking nothing. Again, you are not breaking anything. And the second thing, it's just going straight up. And you are going into the face of a moving average. Remember, this week right here doesn't mean that you broke the moving average. Moving averages, they're just an average. Oh my God, average. It could get closer to it, bounce, could wick above it and bounce, could bounce exactly out of it. So it's just an average. This right here doesn't mean anything. And the second thing is just going straight back up. But what I like about this, I see that your average was not ruined by this add. You survived this pullback and you added somewhere down there at the low. Again, I wouldn't have added right here. We are still not breaking anything. And we are making lower lows and lower highs on the 5-minute chart. There is no reason to add yet because it could have made another new 5-minute low. Right here, you are breaking, making a new 5-minute high, which is good. And there is a pullback, 40% or 30% pullback. You are also playing within the range of the channel. Now, this is good, taking a partial closer to the high, just in case it makes a double top and drops back down. And then you're partialing at your levels. I like your partials. At a level, at a level, at a level. That's amazing. I wouldn't have added there. Would have waited for this and added big right there. And wouldn't have entered here, as you mentioned. Other than that, you did really well. Good job. Okay, today we have a lot of trades, so I think I might need to go a little bit faster. Let's see. You're welcome. So The quality here is not ideal. It's fine. At least we don't see the account number. Guys, make sure if you're sending your trades, have your account number hidden, just in case. I mean, we're uploading those trades to YouTube, right? Those trade reviews. And if there is some sort of hater, looking at our trade reviews, they could just remember your account number, call your broker, and tell them to close any position you have. If you're swing trading or if you're day trading, that could be like, oh, it's simulator, it's fine. It's fine. Now, let's go there and see what you're having right there. This is 1 minute and 1 minute. I think this is the volume. Are you having a chart only for volume? What's that? I'm not sure what that is actually. It's the average true range. Okay, I see. Thank you. Okay, so let's see what we have right here. This long is amazing. I like it. It's decent. The stock is going up. Second candle and third candle. Now, there is a rule which I told you guys, we don't take stock to the long side on a third candle. But would I consider this candle right here third? Not really. I would consider this is second. Why is that? Because the second candle is within the range of the first candle. This right here, I would consider it as the first candle. This right here will be the second candle. The next thing, even if this is a third candle, I would still consider it a good trade because it bounced exactly off the 9 and the 5. So don't take stocks or trades to the long side on a third consecutive candle. But there is an exception. You could do that if it's close to the 9. Why is that? Because when a stock is extended from the 9, they usually pull back. And if it's strong, the pullback is to the 9, and then it bounces. When the stock is already close to the 9, there is no place for it to pull back. If you have your stop loss somewhere around here, somewhere around here, somewhere around here, maximum it could do is retrace a little bit and continue. So I like this entry right here. It was good. Stop loss, I think I would have put my stop loss. I don't see the stop loss for the first trade because there is no partial. Anyway, stop loss for the first trade would have been somewhere around here. Around here. Low the candle too. I wouldn't have given it that much room because this is too much. This is too much. It's enough to have it somewhere around here. And you see the buying pressure. You see that every time it goes down, it gets bought back up. It goes down, it gets bought back up. I wouldn't really expect it to go all the way down there to get bought back up. There is some buying pressure right there. That's a good indicator. Have your stop loss here or here, just to have a bigger reward. And that's good. Partial, and then you exit the rest. I think you added in some unpartial a little bit more. I'm not sure what happened right there, but let's see what happened right here. This is also not bad. ABCD pattern on the 5-minute chart. It is breaking up, getting it to the long side, not working, dropping down, having your stop loss at the C level. That's totally fine. I like it. I personally wouldn't have held it all the way down here unless it was some slippage. This right here is enough for me to get stopped out. Breaking the 9, getting into the 20. After the break of the range, you could draw a range here. Always try to visualize ranges. It will help you a lot. After the break of the range, it's getting into the middle of the range. No reason to hold it to your original stop loss. Exit with half R. Oh, that was stop loss that didn't get. Okay, that sucks. I've been there. Not so fun. But glad you could catch it. Now let's see what Sam did. Sam traded AMD. You're welcome. So Sam traded AMD. Let's see what you did. You traded open range breakout, attempted to get 2 open range breakouts with 1 failure. And the second one worked at 2 hours. This is good, you see? If you are patient enough and you're letting your winners run, you will end up green. Maybe half hours after commission, but still it's not bad. I mean, depending on your size. Now let's see what you have right there. Daily chart, I like it so much for an open range breakout. Let's zoom it in. You could see the uptrend, the pullback, the bounce of the 9, and then we're sitting at a range. It's decent enough for the breakout. Let's see the 60-minute chart. The 60-minute chart is not that clean. I see that we're waving down. This is not the wave down, but this is waving down. So it's not that good. I would have liked it more to the short, I think, based on the 60, but you could trade it both ways. If it's breaking the range to the upper side, you could take it to the long side and play it all the way up here. If it breaks down there is a moving average, which is annoying. I doubt I would have taken it, unless there was a good risk to reward based on that. Let's see the 5-minute chart. So the 5-minute chart, you played that. I see that you played that. It's breaking the range. You're taking it to the long side. It's the second candle, which is good. First candle, second candle. Best entries here, good entries here. Never entries should be there. Now this is a good entry. It didn't give you the risk to reward, I see, and you exited break even and you took it to the short side. This is good. Why is that? After the breakout, it's dropping down now, not to the middle of the range, unfortunately, but you see a pattern right here. A bearish engulfing crack, bearish candle engulf the bullish candle, and after a breakout, we want to see stock either running or running, retesting, and continuing. I would have been hesitant a little bit around here because this might have looked for me like to me like a retest before a continuation. We'll see how it looks like on the 1-minute chart now. But other than that, not the best trade, but it's still a good trade. Let's see how it looked like on the smaller time frames, the 1-minute chart and the 2-minute chart. There is the 1-minute chart. Okay, this is good. This doesn't look like a retest at all. Why is that? It's a double top. The retest, stock goes up, it pulls back, and then it tries to continue and going higher. So there it is. It's going up, it's pulling back. This is the retest. He's taking it to the long side. It's not doing the move up there. It's making a double top. And on the 5-minute chart, you saw how this looked like. This looked like an engulfing down there, bearish engulfing crack. Taking it to the short side, adding to the short, and partially all the way down, which is amazing. Good job, Sam. Okay. Paul. You are welcome. So let's see what you did, Paul. You traded PLTR. And let's go through the daily charts first. So the daily chart on PLTR is not looking bad. Up, pull back, coming back up, new daily high, or gap, even gap up, not a new daily high, showing a strength on the daily chart. We actually reviewed this one before, right? Then we're having a range here. This would have been a good place to the long side. After the breakout, it's getting into the middle. We're no longer interested in taking it to the long side, but watching it for a short place somewhere up there. I see you tried to play a reversal on it, right? And let's see why you took this reversal. First of all, for reversals, we need the 15-minute chart. The 15-minute chart, is this a moving average? 50 EMA. So I see you're having a support at the 15-minute chart. This is, I can't see the moving average closely. This is the 50, right? Correct me if I'm wrong. Okay, so remember our rules for the extreme reversal. 1, you need a pattern. 2, actually number 1, you need to take the reversal into the direction of the gap or into the direction of the daily chart. Do you have that? Check, you have it. 2, you need to have a pattern on a bigger time frame. Do you have it? You do have it. 3, you need a new 5-minute high. Do you have it? You do. Do you need a new 15-minute high? Where is the 15? Do you have it? And not really, unfortunately. And finally, you need the cross of the 50 moving average with the 9 and the 20. Do you have it? You don't. So it's not the best setup. You're having 3 out of 5 criteria in it, which makes it decent. Other than that, it was decent enough. The second thing, your stop loss. Your stop loss was tight. You didn't have it exactly at the low. Unless it triggered this, unless it double clicked in the wrong place. Because on extreme reversals, unlike parabolic reversals, you want your stop loss to be the low. And I wouldn't even use this low. I would actually use that low down there. Your stop loss on extreme reversals is the lowest level you have, especially if your entry is so close. 1 cent. I know, I'll show you a trade. I also get out by 1 cent. I'll share it actually right now after this trade, and I'll show you. Now, you try to take it to the short side. Now, there is no reason to take it to the short side. I know why you took it to the short side. It went, I think, into a level or a moving average. And there was nothing other than that. There is literally nothing other than that. It's making higher highs and higher lows, and you're taking it to the short side on the way up. Never take stock to the short side on the way up, right? I see 3 levels combined, but it's just a level. It's one indicator, one strong indicator, because there are a lot of levels, different levels on the same place, but that's not enough. You need to also find some candle confirmation or volume confirmation or some reversal or continuation to the downside, at least you can't just short it only because you're having a level right there. The levels, they are also averages or approximate levels. It could weak a little bit above it, or just sometimes it will bounce out. It can go immediately down. But anyway, here it's just making higher highs and higher lows. There is no reason to take it to the short side. Be patient about it. Then you're taking it to the short side, putting your stop loss up there. Again, I'm not really fond of this entry right here as well, because it is on the way up still. It still didn't make a new low. If you take it here, or you take it on this candle, at least it would have been decent. Why is that? Because this was already a huge move, and I would expect a pullback before continuation. You could play the scalp down here, but it's still not ready to go to the downside. Now, what type of ABCD pattern is this? Anyone? What type of ABCD pattern is this? We're having 3 types of them, right? 1, 2, and 3. What do you think this is? Yeah, reverse ABCD pattern, type 3, right? The type 1 is when the stock is going down, then it's consolidating sideways, but this consolidation is like this, literally sideways, till it goes into the 9 and drops down. You could take it to the short side here, or you could take it closer to the C. Now, there is also an ABCD pattern, type 2, where the stock goes a little bit up, and then it bounces off the 9 and goes down. You could take it still on the first leg down. And finally, there is an ABCD pattern type 3 where the pullback is so steep, like this. See how steep it is, right? Type 3, you don't take it on the first one, because usually it could make an ABCD pattern to the opposite direction. Some will see it like a reverse ABCD pattern, some will see it like an ABCD pattern to the long side, and you don't want to get into that pattern. You want to go with the winning sides. If you want to make money, you want to go with the winning sides, right? What do we wait in this type? In this type, we wait to see the failure of this ABCD pattern. This ABCD, we want it to fail. When will it fail? Once it makes an M shape. M shape. This is the great entry. I love this entry. This is amazing. For some reason, you exited break even, but I think I know why you exited break even. You just didn't have any luck with it multiple times. Affected your psychology a little bit, maybe. But this was ideal. I love it. This is amazing entry. Let me show you my PFE trade quickly, because I also struggled with it a little bit. PFE. So this is a stock I've traded today. Wildcard, I'm making a webinar today on these with even more information. It will be 5 p.m. Eastern in the webinar room. So PFE, this right here, I traded it to the long side. Why did I trade it to the long side? You know my style. I'm talking a lot about it. It's 60-minute up-in, 60-minute breakout, not up-in breakout. Now, on the 5-minute chart, there is an ABCD pattern, right? Second type. I'm taking it to the long side at the break, having my stop loss somewhere around here, getting my partial at 2 hours. So my 45, yeah, it was 70, my first partial. So I'm looking in around 1 hour here, or maybe less. I don't really remember how much I looked there, and I'm exiting the rest for a loss. Yeah, this was 1 hour locked, and then I gave back more. No, not for 1 hour. I actually gave back around 0.7. So this was less than 1 hour. Right here. Now look at this. You see where I get stopped out? Literally to the penny. Now it's coming back up or forming a pattern, bullish engulfing crack. Re-entering to the long side on a bullish engulfing crack. You don't need to put your stop loss somewhere down there. Remember to say, if you are having a wick, it's enough to have the wick as your stop loss. So this was my stop loss on it. Taking small partial. Now the first partial was at around almost 3 hours, but it was small, 20%. Another small partial, exiting the rest at break even. Unfortunately, that was a bad exit. Why is that? Because this is a retest. Should have held on to it. Now after that, you are forming a pattern. The bearish engulfing sandwich, making a new high. I'm taking it to the long side, but there is a reason I exited at a new low. We are starting to form a sort of head and shoulders pattern. It's not the cleanest, but it's there. The next thing, those wicks on the 5-minute chart, I didn't like them, and once it went to break even, I just thought it will be short, no reason for me to hold on to this trade, and I bailed the rest on it. So kind of tough. Eventually it did work out. If I continued watching it, I bet I would have taken it here 100%. Why is that? Pull back 70%. Now it's curling above the non-moving average forming an ascending triangle on the 5-minute chart. 60 is still looking good, could definitely take it on a new high right there. And then after the breakout, there is a retest, forming an ascending triangle, good place to add right there. Another retest and a continuation. So yeah, this was perfect. But unfortunately, my timing was off, I think. And you don't see the cursor? I think it's visible. I'm just looking at the stream right here, and I can see it. Try restarting the room. I think it will get fixed after that. Okay, perfect. Thank you. So Dell, let's see what you traded. And then we are having Michael. Hope I just don't forget about it right now. What about entering where? 4150, 4150. Let's put this there. 4150. No, not really. It's risky to go down closer to the support only because it's going into a level. That's risky. Remember, we don't go only because it's touching a level. We need more confirmation than that. Now, Dell, let's see what you did. You could do that if it's an ad, but not an entry. I mean, at least that's something I'm not doing. Now, let's see what you did. You traded NIO and you caught a V reversal on NIO. Now, this is not bad trade, in my opinion. Why is it not bad? First of all, you're having 1, 2, 3, 4, 5 consecutive candles. And we know that anything more than 3 is already too much. And usually stocks, after that, they pull back. What's the second reason? The second reason, the stock is extended from the 9 and the 5. And we know that stocks which are extended from the 9 and the 5, they eventually pull back to the 9 and the 5. So you could take stock against the 9 and the 5 if it is your target. And I see you did that, and that was your target, which was good. You got some bonus move to the upper side. And finally, remember what we talked about, how algos work? Cross, algos should take it to the short side. But sometimes if the stock is extended from the cross, algos will not get that entry. It's just the risk to reward is simply not there. How do they go? Cross, short, until the next cross happens, exit. If they take it to the short side here on this cross, which is somewhere around here, they would lose something. Yeah, they would lose this much, right? So what usually happens after crosses? They pull back. They pull back to the cross area. So that would have been my second target, the cross area. And then at the cross area, they take it to the short side, as long as the cross still didn't close, right? And the next time when it closes somewhere around here, there will be some profit on it. So first target the 9, second target the cross, and if you're interested in taking it to the short side, you could take it to the short side. Would I take it to the short side there? Not really, because it's just not clean enough for me. It's not the setup or strategy I would take. Actually, it's not bad. There is a retest. Now I'm seeing it. So there is a breakout area, resistance, then acting as support, then acting as a resistance one more time. If on the 1 minute chart we are forming sort of an M shape, which we do, this wouldn't have been a bad entry for a short side. Good job, Del. Let's see Michael. Michael traded plug. Plug on the daily chart looks really good to the long side. I like it. Going up, pulling back, and then it's starting to slope back up. Let's take a look at the 60-minute chart. Is decent as well. Not my ideal 60-minute chart. Why is it not ideal? Because it's going up, and we know how candles are being traded. Like it could go down, then come back up. So it could go down and it could go up. It's tough to catch trade there. One thing though, why would not I trade this to the long side there? Anyone? Or if you are not going to take this trade, what would be your reason not to take this trade? The answer is on the daily chart. Actually, the daily chart is giving us even 2 reasons. That's the main reason, GS. Exactly, the average true range. And the second reason, you're going into a resistance area. So first of all, the stock did a move bigger than the average true range. You know that the average true range on this thing is somewhere around $1.50. And today it did almost $3 move. You can't force it to just continue going higher after all this move. It could just drop at any time. And the closest place for it to drop from is a resistance level, especially if it's in the face fit. I see that it broke it still a little bit. but it's risky, right? Into the face of resistance after the stock made a move bigger than the average to range, it's a no trade for me. It fails more than it works based on the statistics I made on my journal. I see the reason why you took it to the long side. You took it to the long side because it was an ABCD pattern with a W shape. Now, I would have taken this 100% if this move was still small, somewhere around there. If this happened somewhere around here, I would definitely take it. But when this happens after the stock didn't move bigger than the average to range, I would not really take it. The second thing, there is an important criteria on an ABCD pattern is that you want to see a pullback at least 30%. Like this is the minimum. And a lot of times, if I see a pullback only 30%, I don't take it. I love pullbacks 50 to 70% on ABCD patterns. If you consider that this right here is 100%, right? This is so small. This is not even 30. This is around 25% or 20%. Which is not big enough for a continuation. So first of all, pullback is not enough. Average to range done, and going into the face of resistance. It's totally fine, Michael. Good job exiting though. Marcus, let's see what you traded. So you traded XPEV. XPEV, what do we see right there? The 60-minute chart, nice one, clear range. If it breaks up, it could make a move all the way up there. I see you marked it, you had even a level up there, which is good, which could act as target. Now, after it breaks to the long side and goes into the middle of the range, we're no longer interested in it to the long side. We could actually start being interested in taking it to the short side. We will not short it immediately. We will short it only if we are having a pattern. This is what we see on the 60-minute chart. Now let's go to the 5-minute chart. The 5-minute chart, I see you, what do you do there? You tried to short it. Now, I wouldn't have shorted it immediately after the open. The breakout still didn't happen, and it's still within the range, and it is above the half of the range. Around here, I'm long bias on it, not short bias. You took it to the short side because it was a 1-minute open range breakout, right? Red candle, new low, 1-minute open range breakout, taking it to the short side, right? Yeah, exactly. So remember, if it's a 1-minute open range breakout, but this right here contradicts it, just avoid it. Better go with the bigger time frame direction. It works well, way better, and you see that, right? You see how it worked better? You could take it above 50 level or above 50-20 level, somewhere around here, and then it just spikes up, which is great. Now, after the breakout, what happens? It goes into the middle of the range. Still not in the middle of the range. Right here, it's still not in the middle. 50, 50, 50. It's still not in the middle of the range. It's just dropped into the range, which is not enough. You want to drop at least 20, 30 more cents to go into the middle of the range. I see you took it to the short side a little bit earlier, and let's see your entry. What's your entry? 1, 2, 3. Do we take them to the short side on the third candle? Not really. They could pull back. And where would they pull back? They would pull back at least to the 9-moving average on the 5-minute chart. So if you decide to take stock to the short side on the third candle, make sure that your stop loss is above the 9 and the 5 just to give it some extra room. And then you could always add if it works. And now you see that after 3 candles, it's making a pullback, which is a new high, and then a continuation. Now the next entry you made was really good. This entry here is amazing. I love it. What would be my stop loss? My stop loss would be the middle. Why is that? Because now you are forming another range. Oh my God, that was ugly. Now you are forming another range, and it's enough clean. If you get your entry anywhere here in the middle, your stop loss will be above it. Once you're getting at the break, it's enough to have it in the middle just to get a decent risk to reward. You can't really expect it to go all the way back up after the break, not if it's weak. If it does that, you don't want to be in that position. Now, good entry, stop loss somewhere around there, partialing all the way down. A little bit of too much partials right there, I think. Let's take a look at the 5. Yeah, a little bit too much partials right here. It's working in your favor clearly, right? You could take 1 or 2 partials because it's sitting at the support area, but then that's it. It's enough. Then the second partials could be down there, which is good. A strong moving average, 200 moving average. The add was decent. Yeah, an entry in the third candle is bad, an add is decent. And let's see what you did after that. You tried to take it to the long side. Now, this is a V reversal. All those positions, I wouldn't have taken them for one reason, not going against the 9-moving average on the 5-minute chart because it could just simply continue. So yeah, this is amazing. This is good. This is not necessary, right? Still early. This is not necessary unless you're giving it some extra room, and those are not necessary. You don't need to take a lot of trades during this time. If you're watching the market, that doesn't mean you need to take any trades on it. You could watch it for an hour or 2 hours and take only 1 trade or 2 trades, and sometimes it will make a huge move without you. That's totally fine. You don't need to catch every single move. I see that you try to catch to the short, then you try to catch to the long, then you try to catch to the short, then you're trying to catch to the long. You're trying to be in every single move. You don't want it to run without you. That's not the best mentality. Try to resist it. One thing which could help you with this is having a trade book and having some setups with a checklist. Right? I'm having 1, I'm having 2, I'm having 3. Okay, I'm taking the trade. I'm not having that. I don't see that. I don't see that. Just let it go without me. Even if it's a winner, which will run a lot, it's totally fine. Let it go without me. Exactly. Okay, that's smart. Nice. ADG. Already reviewed the same trade. Okay, all right, since it's reviewed, we will go to the next one. Abby. What did you trade? You traded PLTR as well. So Avi, this is amazing. This is amazing. Remember, we just talked about these guys. If you manage to catch it, this is a huge move, right? How many R's did you get on this one, Avi? Can you tell us? The first trade, not all of them. If you're here. 4 R. You see, guys, remember what you said? This is exactly a big move. If you manage to catch this first one, it looks like it's a small candle in comparison to how much it moved today. This looks like a small candle, but at the breakout with the technical stop loss, this is a minimum of 4 Rs. Minimum of 4 Rs if you give it wider room. I think Avi even tightened the stop loss a little bit, not to the down there, somewhere around here with those partials. Overall, he got 4 Rs. So this was amazing. Now, let's see what you did there. I can't see. Okay, this is the 1 minute chart. Perfect. Now, let's see what you did right there. This is a reverse ABCD pattern, which is good. After the breakdown, you are making a reverse ABCD pattern on a retest, taking it to the short side, adding and partials all the way down. Both of them are amazing. You got it to both sides. Remember what I said, if it goes to the middle of the range, we are no longer interested in taking it to the long side. We're interested in taking it to the short side, but we will not take it to the short side only because it went into the middle. You also need some sort of setup or a pattern, and there it is. The reverse ABCD pattern or the 3-bar play where the ad was. I like your entries and ads. You're actually working on something really important, getting entries as close as possible to the support or as close as possible to the resistance, which will definitely increase your reward by a lot. This is different than my style. I try to work on this as well a lot, but I tend to get in after breakouts, which gives me the confirmation. This right here is amazing. Ornis, let's see what you did. So you traded Chris. Where did you guys find Chris? It wasn't on the gappers list, right? So Chris on the 1 minute chart, it's tough to just say what he did on the 1 minute chart, but let's see this. No reason to exit here. This should be the stop loss, and it was working in your favor. It was making a high rise and high lows. Literally no reason to exit. Then you are getting it on an ABCD pattern. We need to take a look how this looked like on the 5 minute chart. I will take a look at it now in a bit. Then there was a fake breakdown here, after which it started coming back up and you took it to the long side, which is great. Some partials up there. Little bit late add. I think there is a level right there. You went literally into the face of it. And was this a short with shorts ads, or it was a long with a partial and a stop out? It was a low float from the Nasdaq movers. Okay, I see that. The microphone in the chat room was muted in the beginning for me. I see, but it was good. I mean, it was clean enough. I like this, and the move was really big on this one. So you took it to the long side here. This is not a bad long in my opinion. Why is that? Because after the breakout, we expect retest and the continuation. This type of entries is totally good. It's risky, a little bit difficult, but if you are good at this and you are working on getting entries as close as possible to the support, and I see you are doing that. You are doing that, which is great. You could make decent money even within 1 minute candle. Now, these longs I would definitely not take. Why is that? It broke out after the break. It's getting down into the range. This is not strong. Once it does that, we are no longer interested in taking it to the long side. Now, let's take a look how it looked like on the 5-minute chart. 555. Increase. So there it is. You see what happened right here? It started getting extended from the 9 on the 5-minute chart. It might not look like it's so extended, but this is $1 move. It's too much, especially for a stock less than $10. It's more than 10% of the stock price, 15%, somewhere around that. Sorry. So yeah, I definitely wouldn't have taken it to the long side anywhere around there, unless we go to the 9, holds it, and then bounce out of it. Let's take a look at this. This was good. I mean, I doubt I would have traded it. I wouldn't have traded it like 100%. If stock makes most of the move in the pre-market, I'm not trading it after market open. But this is a low float. Low floats, they have different rules. So don't take my word on this one. If this wasn't a low float and it made most of the move in the pre-market, I wouldn't trade it. Low floats, they cause some FOMO, and it's so easy to drive the price higher on it. The moment it makes a new 1-minute low, people see this, they get in so fast, and they just push the price higher, which causes it to make some move. I think this rule should not be included in low floats, only on high cap stocks. Let's take a look at XPEV. Isn't it riskier to get before a breakout of a consolidation area? So XPEV, there are two different type of entries, all right? Now look at this. If the stock is breaking out, and then it's pulling back after the breakout, right here, you could take it to the long side somewhere around here. Why is that? Because this is a clear retest. The breakout happened. You didn't chase it. This is the pullback after the breakout. You're getting as close as possible to the support, especially if you notice that it's holding there a little bit, or there is a daily level, or there is a moving average right there, and then you go for a continuation. Is it risky to get in here? Yes, it is. Let's say that this is the previous price action. Okay, no, that's ugly. Let's just do it differently. Let's draw it somehow like this. Okay, let's draw it somehow like this. Now, this right here, it's going up, it's pulling back. If you just randomly decide to buy it somewhere down here, even if it works in your favor, this is risky because you are buying at the dip, but you don't know if it's the dip or not. There is nothing telling you that this might be the dip, and you can get in as close as possible to the support. You're not sure even that this is support. It could do this after that, retest the previous area, and then go higher. On this one, it's clear. There was a breakout, it went up, it pulled back, it retests, it holds it, and you take it to the long side, and then go for a continuation. Now let's see this. What you did right there. You took this thing to short. So what's this stock? Okay, SPCA. So we need to take it multiple time frames. Let's take a look at that. This is SPCA, and your entry was to the short side at 940, somewhere 940. Let's take a look at it. Okay, I see why I wouldn't take this trade. Anyone, guys? I bet you know it. Why is this not ideal setup for a short? I see what you wanted to take. You wanted to take a reverse ABCD pattern at the bounce of the 9 moving average on the 1-minute chart. Now, why wasn't this ideal? Come on, guys. I bet you know the answer. Long weeks on the 16 chart. Okay, I didn't pay attention to that. That could be a good reason, but there is some other reason. Actually, these weeks, they weren't there. This week right here, it got formed here. The moment this closed, it got formed there. So this week wasn't there. There is another reason. Average through range. Not exactly the average through range. Look at the 5-minute chart. Yes, exactly. That's it. To extend it. You see this? This right here is forming somewhere down there. We don't want to take a setup for an ABCD pattern on the 1 minute chart if the 5 minute chart is not supporting it, meaning it's extended from view up or extended from the 9 or the 5, because we know it could go back there. In fact, if you played this right here for a double bottom, it would have been an amazing setup. Why is that? Stock did already a huge drop. This is $2 drop on a $33 stock, which is 5%. It is extended from the 9 and the 5. It's giving you a setup right there with a hammer as confirmation. Take it to the long side on a new high. Stop loss the second bottom. First target view up, second target the 9, and then a bonus if it makes a bigger move. Now, if you take this setup right here when it's forming it somewhere around here, it's bad because you'll be going against the 9 and the 5. Down here, it's totally fine, and it's even a good setup to the long side. To the short side, as we said, it's not ideal. You might tell yourself, okay, I want to take it to the short side because it did the reverse ABCD pattern along with a 5 minute open range breakdown. It's not literally a 5 minute open range breakdown. For a 5 minute open range breakdown, so one, you need a stop to make a move at the open, which is smaller than the average true range. Actually, who said PLTR was also correct. Let me see who mentioned that. Chris, yeah, I didn't pay attention to that. This $2 drop at the open, it's also the average true range. So the first rule on the open range breakout, you want the stock to make a move smaller than the average true range. Did it do that here? No, it did the average true range fully. Stock did a move bigger than the average true range. So the first criteria, which is one of the most important criteria, is not there. Second thing, you want stock to be close to view up. Close to view up. Is it close to view up? Right here, it's not close to view up. And finally, you want it to break out. Breakout of, I don't know, candle, level, daily resistance area, anything like that. I prefer breakouts of pre-market levels or breakouts of levels on the 60-minute chart. And that wasn't there as well. There is like literally no level down here. There is nothing to break. It didn't even break the candle, right? That's exactly what I was trying to do, but didn't think overextension into consideration. That's totally fine. We all have been there. And that's why I'm doing the trade review. I'm just trying to help you not to make the same mistakes I did when I was trading. Hamster, let's see. It's not bad, but it's not good as well. It's a little bit difficult. To be honest, it's not bad because of all the wicks. My screen will blink right now. Give me a second. Okay. I don't know why the resolution changed here. Yeah, for some reason it changed. I will need to adjust it again. Okay, this already the last chart, so it's totally fine. Thanks. Anyway, it's not bad because of the wicks. Let me actually just increase the chart. I have no idea why the resolution just decided to change. Now, you could see those wicks down here, which are looking good, definitely, for a long. And it could make around at least 33.60 if it breaks, or 33.80. So is it bad? It's not so bad. I don't like it because the drop was big, and it's close to moving averages overall. Now, if you take it, it's not bad. In my opinion, it's still a decent setup. Aqib, not really, because those breakouts or those reverse ABCD patterns on the 1 minute chart, a lot of times they will break out. You could say that there is a reverse ABCD pattern on the 1 minute chart, take it to the short side, it does break out, but it does a small breakout and then it reverses. Why is that? Because it's already extended. It's just better to avoid them. And the breakouts could get even a worse feel, and then it will, you would take it to the point where it reverses. A lot of times this happens. Now, Hami, by the way, you said you went live today, right? You stopped from trading before a 5-hour winner. So was it a red day today? I just read your message above. You said it's your first day in live account, and your account dropped below 25K. So how much did you lose? Was it a big loss, or you didn't have your max loss for the day there? Okay, I see. I see. You. I was about to take. It's fine. If you are opening an account, guys, with IB, make sure that your initial deposit is not exactly $25,000 or $25,000 and $50. Like the least thing, it should be $25,000 and $500. Like the least, preferable to have it at 30,000. And 30,000 is actually too big sometimes, especially at the beginning. If you are revenge trading, you don't want to lose 5K. Some psychology triggers might be there, and you might lose it and drop it all the way below 25K. You will still not blow out, and this is the good thing about the PTT rule. It will not allow you to blow out. Once you go below 25K, it will just stop you from trading, unless you just do something stupid and you average down and drop this 25K to zero. But other than that, that will not happen if you are stopping out at your max loss per trade. So have your account at 2550 and 25,500. Next time, hopefully that will not happen. I'm glad you at least saw that there was a winner, and you know that that trade would have got you back to green. And next time you'll catch it and you'll make up for those losers. All right, guys. So do you have any questions?